Hi everyone, and thanks for watching our December Market Watch. Lots going on in the markets at the moment. It's actually been quite a decent few weeks in terms of movement. A few of the markets that we talked about in our November Market Watch, the Aussie dollar, Kiwi dollar, etc. We were looking for a move higher in those, and we have seen those through November and has moved quite well. Another market which we're going to be touching on again tonight was gold, which we were looking at for a low in mid-November for rallies, also performed well, and we're looking for further, which we'll get into a bit of detail. So there's a few markets that have been doing nicely for us, and I want to go into a bit of detail on two more this month that I'm really focusing on as we head into the Christmas period. You see right up here, the two we're going to be looking at in this video for December is the euro and gold. As I say, I did touch on both in their November Market Watch, more so on gold. We need a bit of detail, and we have seen movement of that, but I'm going to go into a bit more detail on why I think there's more upside potential on gold, and also take a look at the euro. Before I look at the chart, I'm going to take a look at the conditions which behind both these markets, just to illustrate why I'm drawn to them. Just going to go over onto our seasonal data. Looking at our heat map to begin with, which shows us the average gain or loss per month for each market. You can see here the euro, we get drawn in there nicely into this nice green figure that we've got here, 0.91% gain historically for the euro, and you can see that it's actually after April, it's the second best performing month of the year. The gold number doesn't look that interesting in there, but it's actually because of the nature of how it makes a higher low. Just look over onto the charts so we can see a little clearer picture. We'll start with the euro first of all, and you'll see the December period is typically one of the best, as I've already said. We just scroll down to look at the chart here now of the euro, and I'll zoom in a little bit so we get a closer look. You can see the euro here, typically making a little bit of a low towards mid-November, but generally after we get into the start of December, we see a nice proud performance, typically one of the strongest markets actually. So there's a lot going on at the moment, specifically around the Federal Reserve and what they're going to do. There's going to be a lot of interest in their meeting on the 19th of December. So we'll see a lot of volatility going into that meeting and most likely afterwards. So a lot is reliant on what is actually said and done at that meeting. But there's certainly the potential there for the euro for a move to the upside run up to December. But you'll see on the other side of this that we typically don't hang around that long going into. So before Christmas, I would look to take profits if we're able to get long in the euro. On the other side, as I was saying, we're looking at gold. We'll take a quick look at the metals as well, and we can see, we just scroll down to gold here. From those of you that anyway watched last month's video, you will see I talked about the little potential low coming in mid-November. We look to have got that in gold now, and you can see there's two seasonal patterns. Here's the historical seasonal pattern, which is the blue line, which looks at the full history of what we have here for the gold futures of 43 years, and then we have the yellow line, which is the weighted average, which puts more significance to recent years price action. And what we seem to be doing is following the price action of the historical pattern, where we're making the low mid-November, push a little higher, look to make a little higher low, and then looking now for that drive through. That's the pattern gold seems to be following. So that's giving us confidence we're going to look for this little move here through the rest of December. And unlike the euro, the gold typically follows through on that move. So we're looking for a move definitely into end of January, and likely we're looking for a move a little bit further into February. Both are supported by the COT data as well. I've just looked on to our COT data. You'll see, I'll just zoom back out again just to give a bit of perspective on it. You'll see the euro, certainly not massively extreme bullish on the euro, but we've seen commercial buying come up to levels that we haven't seen actually for a while. We're breaking out of this little range that we've been in for a while. So there's certainly enough buying interest in there to see a little bit of a rally up towards sort of the mid to high teens, I think. Not looking certainly nowhere near the levels to cause, as we can see from the index, we're certainly nowhere near the levels in the index to cause a significant low and actually a major uptrend from here. But I think considering we're only looking for a few weeks to the end of the year, that would be a nice area to aim for. Gold's a little bit more supportive of a rally. We've seen the index be in a bullish area for a number of times. You can see typically looking back historically, when the index is getting into these areas, typically coinciding with nice lows in the market. Commercial buying as well, nice jump 2 weeks ago, actually back up to 200,000 and any time, say, historically back in around that area, we typically coincide with nice market rallies. So this cut data is definitely more supportive of a rally in gold than it is on the euro, but we are looking for much more of a rally in gold. Looking at the charts now to try how to see if we can take advantage of it. The euro, you can see the breakdown in price action as into the downside. We did have quite a strong trend. We've seen a failure down through here at 113. We see that attempted inverted head and shoulders through here. Now price action, I'll just zoom in so we can get a closer look at it. Price action isn't particularly clean or neat in here at the moment. We've sort of messing around, we're getting very messy here in the right shoulder. But for the near term, as long as we can stay above this 113 level, I'm looking for a move back up towards the 115s. And I think there is the potential of a little bit higher on it, but that'll be the near-term target as long as we can hold above the 113 area. So not a huge chunk in there, but I say a lot will depend on what we can do with the Fed on the 19th. There is the potential we could break through that and push back up towards maybe the 117, 118 area, but there would need to be quite a significant change in policy. A slightly nicer chart is our gold. I've mentioned already. We had talked last month about looking for a low in mid-November, and there's the 13th. Typically we get a low around the 14th, 15th actually of November, and we just got it 2 days ahead there, so that's it, come in nicely for us. At that point, we've pushed higher, and now we've got our little higher low, and we're driving higher again. So gold's very much following the seasonal pattern, and the cut is supporting that rally. Nice area here at the moment of what was resistance at 12.38. Seem to be attempting to push through that. If we can definitely clear through that, stay above, close above and stay above here over the next few days, that'll be very bullish and looking for continuations. But there's definitely big potential of gold as long as we can stay bullish, and I say no major levels of resistance to contend with. So we're looking through from December, January. We could be looking at a real nice rally, similar to what we've done in the past around this time of year as well, looking back historically what we've done. So definitely the preference is for gold, but I think there's potential there on euro. One thing to reference in terms of gold is looking over at the dollar versus the Chinese yuan. This has been one market that's been driving and helping to devalue gold, and we've seen a big breakdown over this last few days. So that's the yuan strengthening against the US dollar. If we can continue with that and see a move lower on this, that'll be really, really bullish for the gold market and really help support us in our efforts to get long through December. So that's the two I'm looking at. A lot will focus around the ability for markets to see anti-dollar moves generally, so not just the euro and gold, but quite a few other markets should be looking at in terms of bearish dollar movement if that's what we see. But at the moment there's certainly the potential for it. So that's what's going to be on my plan. If you want to keep in touch or up to date with what I'm looking to trade and how I'm looking to trade them, we'll jump on to our Monday webinars live every Monday night on our website. Details below if you want to see. And I'll be back at the beginning of January for an update next year. Okay, guys.